Hello everybody, morning. It's Matt from Vector Trade. Just going to give you the weekly roundup, but actually as part of a lesson as well on DAX, just to talk you through. And obviously in our weekly seminars starting next week, obviously you can ask questions and answers as we go through. So make sure you send me your email address and sign up if you haven't already done so. But as with any chart, I don't like entering the weekend with any positions. I like to be clear-minded, open-minded, and say, where's the probability areas of what the price is going to do for the week coming. So to start off with, we're looking at DAX, German 30, the daily time frame, and just a couple of observations which I'll always do. I'll always look at roughly, where are we? What do the odds suggest we should be doing? Are we near the all-time highs? Are we near the all-time lows? So just to really highlight that, just use the indicator tools over here, and we can put some horizontal lines or horizontal rays, whichever you prefer. So we'll go here. This was obviously the peak at the beginning of the year before the market obviously had a huge drop. If I scroll across, I can put the previous drop, or sorry, the previous peak before the previous drop came all the way up here, and you'll see what happened by, reached these levels, got a really good decline, reached obviously these levels up here, got a big decline. So that these levels, sort of 13,587, 13,825, are important. Just get the two lines. This works on all time frames as well, whether you're looking at a 5-minute chart or longer. So I want to say, right, that's a key area, this key zone. Just beneath this, you could argue, where was there a big reaction, strong reaction, and probably this black line, there was a peak here. We got a sell off, it broke above, it came back down, came back to test, and again came back down. So we can then put these two lines in here. You can see when it actually broke above, it was support, and then it just crashed through. And at the moment, there's a lot of activity in this area, lots of wick. So what I'll do is just put another, it can be any color you want, but pink box in there. And all of a sudden, as I zoom right out on the daily time frame going back, till 2016, you start thinking, well, this is big areas, very important. Doesn't mean it's going to sell off, but after such a huge rise from, let's call it 8,000 up to 13.5 there, 5,500 pip move. It's really big, and you think, right, it might well take that out, or you might say, right, well, is it going to have a little sell and then go back up? To have people take their profits. The big people who obviously bought down here, they might be looking to do that. It seems to be stalling, hesitating. It's not a signal, but it just gives you a really good view. So, at this point, until there's a signal, you've got this much downside, arguably, versus that much upside. We can do exactly the same. So, where was the previous areas? And, this was obviously a key zone. Came up, it was support, dropped back through, just about came, but then crashed back down. It held for quite a few, when's that? How many weeks is that? August to November before, huge. Then before that rally up, came back down, dropped back in. So you can say, well, actually, I could put, some areas around this area and say, well, this seems to be a huge area. Okay, lots of activity, either broke above and supported or crashed resistance. Came back down here. Was support here, support, crashed back through, struggled to get back up, came back, used it as support up, came back, used support up. So again, you can say just probability wise and risk reward, where do you want to be at? Like as on a long-term scale now, bearing in mind you've got the US elections coming in. Will people have a final run-up? Chart pattern wise, is that potentially, we've got double top, could it be a triple top potentially? Will they drop that in the election and then rally up? Who knows? Or potentially they could just go straight on it from here. But I like to have a look on the daily time frame, just to say, well, where are we in the market? Because we could be short-term bullish, long-term bearish, or vice versa, depending on the markets and the time. So just some standout observations. We've got the moving average 200 here, which is the blue line. Indicates we've got fairly basic. We've got the awesome oscillator down here, which again you can see there's no obvious signal either way. It is negative. Okay, so if I bring that up, it is negative, but it seems to be heading towards positive. But whilst it's below the line, we need to be cautious. We've got the RSI on level 5 here, and again we have to just, again, you don't assume you know, you just use the tools. So at the moment we seem to have, you know, downsloping resistance there, and from this previous low here, you know, we could be looking at that pattern. So again, it is perfectly reasonable that it would go, you know, up here and back down, to form a little bit of a base. And again, you want to see some kind of divergence there. I'm just going to concentrate on the price. Once we've got the daily, we can then of course zoom in to say, right, how are we going to trade this? And again, you can do exactly the same with that. If you prefer, you can keep that on there, or with MetaTrader 4 potentially open another tab and then compare the various time frames. Okay, so as we start coming in, zoom in again. This is the pink box. I'm going to just clear this for now. So we've already said that on the daily we're near the top end of the range. Should we keep that? I mean, write it down if it helps you. On the different time frames, you start with weekly, look at daily, and then as we zoom in, because again we could be short term, could be opposite to long term. So again, short term we might be bullish and long term might be bearish. So it is all relative to your time frame. I'm going to give you a quick review on what happened last week and what obviously everybody in the group was following and watching. What happened, a couple of weeks ago now, it was really testing these higher zones again, 13,400, and we got a sharp decline, tried getting back up, but no, had congestion and it came back down. One of the things we were looking at, and obviously we profited from quite bigly, was last Friday. We were looking at the divergence here on the RSI 5. So the price was coming down and making a lower low on the price. RSI was telling us a different story, and there was a bounce to come in. So not Friday the 2nd, but the week before, the last Friday in September, we started it in the afternoon, got a really nice bounce which came up. Okay, really bit strong reaction there off that divergence, and then pretty much all of last week from Monday it was pretty much sideways. So we started with 12,943, and the low was 400 pips there, so not a huge range for a week. So we kind of think after a strong move you get the consolidation. For the Elliott wave we were looking at and the count we were doing, we were looking at an A, a B, and a C here, and it was a double correction. So we have a double up here, and then we finished it off, and we came down. Okay, I mean these counts are just rough, but they all worked, and then we came down there. So we got a double correction, and that the chart template, the chart pattern, kind of gives us a bull flag. So what you would expect in this scenario is from that level price then comes up. So we're just going to zoom in now. We're going to show you some of the Fibonacci. So there's a couple of Fibonacci's that I want to look at. The first Fibonacci, using the Fib retracement, after we've had this, we want to look between sort of 61.8 and 76.4 as an entry, because that's where they're going to come back down and then take off again. So if I put this down here, just like that, you're going to see, and again, you can use a box, so you can say, right, here's 61.8, 76.4. We want to see a reaction from this box. Okay, that's the key. That would be the buyer. If we're buyers, strong move up, consolidation, we're looking to get in at that level. Okay, the next one we're going to look to do now is find the target. So the first one, find that low, Fibonacci retracement, but we've added some levels to get the extension on. Okay, and from this level we would want the 1.618 to 1.786. What I can also do on here is use the trend-based fib extension, which is all the providers will give you that, but on here trading view is called that, and then you can get the same MT4 on the rest. But we start at point 0. Okay, we come up, so we're going to get an extension of this whole move. That's what we're measuring here. So go to the peak, then the 0 will then come back to the low point, and again, okay, so with this we should be looking at anywhere between the 100 and the 1618, which is way up there. Okay, you can see that one is 13,513. Just going to zoom back in. So what I would do is I again create my box. I look at the 100 extension and the 1618. I say there's probability that that's going to be the target area as long as this low holds. Okay, next thing to do, look at the price. So price range with a bull flag, bear flag, you generally get the pole, this is called, and then this is the flag, but the poles should be equal or thereabouts. So come up, say what, we had a 615 pip move from the lows the previous week to the highs on Monday. I can either clone that or just drag it, put it at the lows, and this, is that, yeah, it's about at the lows. So then I've got another target, okay? So then what I can do is just using all three now, I start building a picture to say, probability wise, I've got a fib extension, excuse me, fib retracement with the extended figures on, and I also have equidistance for the both poles. So now I'm starting thinking, okay, this is looking promising. Hopefully we're not oversold on the RSI, and no, definitely not. I can use these 2 points to give me a trajectory and say, right, you know, where do we think price is going to go? So it gives me an idea. Oh, let's just put that at the top for there. So that's okay there as well. Just looking across and say, right, well, actually, this area ties in very nicely with previous, you know, congestion zone. So again, all of this is all this mess, I call it, which was previously could have been expecting a breakout, and then market fell away. So again, there's loads of reasons. It could well go beyond this level. You know, there's nothing stopping it. The previous drop last February, March, around 13,500, 13,600. Again, we had potential areas that we would want to target. But this now, just combining these tools. So what I've got is to end the move. Okay, to end that. Let me just get rid of that for now. To end this, we had the divergence. Price came up. Consolidation. We've then taken off. So Friday saw a beautiful move. A lot of people made a lot of money. Price came up. We're then using, again, probability. So we've got two different fibs we're using. Got an Elliott wave count here. We've got a chart pattern. So by using all of this, then actually we can say, you know, we're fairly confident that if Friday's low holds, then it can go up there. The scenario 2, which is why you need a stop loss and why it's very, very important that you understand the technical side so you can do your risk management. The other option is you've got, which I don't actually believe this is the case, but we have to be prepared. You've almost got, you know, at the moment you've got a move down, then you've got a 3-wave move up. You know, ABC, well, ABC, and the C subdivides into 1, 2, 3, 4, 5. And then you could say this is a 1 down, 2, and the 3. And then this is a wave 4. So this would be wave 3, this would be wave 4, and then a wave 5 down. You do not want to be chasing that move. You know, price again on the hourly 1 is below moving average 200. Ideally, you get some kind of retrace. You know, and the target level arguably would be where you had all of this. You know, might go there, might not go there. But that's where I would be looking for. You know, anywhere sort of 650, 680. I don't want to be holding anything. If it drops below here, okay, I don't want to hold anything. The reason I don't want to hold anything is because technically, if this is a 1 and a 2, a wave 2 can go to 90%. Now here on this, you've got an ABC, ABC. There would be a debate about whether that's a 1, 2, and this was all a 3. That was a 4, and that's a 5 down. At this stage, I don't see that, but that's why, because if it happens, then that low on Friday would be crucial. Because in theory it'd go lower before then taking off. So you must be aware of that, and that's why we use the stop losses, and that's why you find the entry using the divergence to get in. Awesome oscillator, you'll see, you know, throughout that was obviously all negative, and then on Friday it switched and became positive. So again, another encouraging sign that the move is up. There is a lot of you know, people say the market's greedy, but it's not at the moment. There's, I think, if you look at CNN Fear and Greed Index, it's currently in fear. September, we had a lot of consolidation, which was obviously predicted, and a lot of people expected September to be maybe negative for the month. We've now started October. It's the final full month before the election, if that goes ahead. And one of the things that you'll notice is they are very, very clever. They've driven the price down at the end of September, and so they're starting the month at the beginning of October at a low level. So now you imagine if they do drive price up for October, that the monthly candle would then maybe look bullish because you've got a nice wick below, price drives up. So how October ends would be very important, because if that does suck people in and the retailers in to buy in during October, thinking it's very bullish and they've started the month low to then drive up, encourage people in. If they do drop, and it's not prediction, if they do drop in November, then that would cause maximum pain. Just going to zoom back out to the daily, clear all those drawings, and you can see that actually what would be, if they could drive this up, yeah, somewhere up there, back to test these sort of areas, test that area, and then get the retrace. Okay, from an Elliott wave perspective, normally when you've got a messy consolidation, because generally a 2 or 4, wave 2 or 4, the potential wave count that you might be looking at here is a 1 2 1 2 3 4 5 3 and a 4, and we could be in a wave 5 now. Okay, just going to show you an Elliott wave potential on the weekly, so I'm just going to remove all these drawings. And again, we could be looking, I'm just going to show you, so Elliott wave subdivides, so we've got a 1, a 2, a 3, a 4, and a 5. Now, one of our favoured counts for the correction was actually an A and a B and a C. Okay, if I zoom in, you'll see that. So what that means is this would be a move up, but this is all a wave 3. Okay, so what I think has probably happened is, put this on. This was a huge wave 1. Okay, this was a wave 2. Let's just put that there. Okay, wave 2. This was then 3. Okay, but 3.1. So this is where the wave started. Okay, 3.1, 3.2 is down here. And this is really important for all of the markets because they're obviously all linked. And then 3 of 3 was here. Okay, I'll just finish writing this because this is crucial. Then we've got an ABC, which I believe was a 3.4. Okay. And now we're coming up to the 3.5. Okay. Then once you get your 3.5, you're then talking a really decent drop for a true wave 4. Okay. So what we're saying is this could be the final move before something really big happening in the markets. So we need to time this right. So if you look at that on the weekly time frame, going all the way back to 2001, this is 1999. This move is ending. That was how volatile the move was in February, March, just to correct this part of the cycle. So then to correct the whole cycle, or at least wave 4, the whole cycle is fairly crucial. So we then come back in and we have a look at this. Okay, get into. So then you say, right, well, so where again were we? And we'll have a look and say a 1, potentially 2, 3, a 4 of some kind. So we could potentially be in a 5 of a 5 going back to 1999. So there's a real danger in the market. So again, to show you short term, we're talking on the hourly and 4 hourly, maybe October, we could potentially be looking at bullish. But then something could well be happening shortly in the market. So again, managing your risk at these points is hugely important. We need to see how this plays out. At the moment, there's lots of reasons why there's nothing bearish yet, but why you want to be cautious about what's happening. So hopefully that lesson will be good to get you set up for the week. So again, as long as Friday's low holds as per the targets, we would expect it to be coming up here for sure. if that breaks, there was the levels higher up. But again, use your Fibonacci. So we'll have measuring the tools there. So the first, it should go at least 100. Okay, then use the next one, fib retracement, but with the extensions on, and put 0 on here. We're getting a high probability here. Lots of reasons why it should go up to 150. Equal leg of here as well, back up. So lots and lots of reasons why short term we may well be bullish, but if Friday's low is taken, it changes everything. And again, remember to look at the weekly, use all the tools, and as I say, next week we're going to be doing the live webinars, so lots of questions and answers. Make sure you're signed up. Go to www.investor.co.uk, get download the packs, join the WhatsApp group, the webinars, and obviously enjoy the YouTube videos where we'll be analysing various markets. Hope you enjoy the rest of your day.